Hi everyone, welcome. Thanks for joining us in our next video. So today I thought what we'd do is address the subject of multi-asset class investing, and it's quite related to the last video which talked about diversification. So we're going to look at it in its own individual component parts, and we'll look at some of the advantages, some of the pitfalls, and also look at blending them all together and what that might give to you. And so you can decide whether this might be a subject and a style of investing which is appropriate for you. So I think the best place to start is equities. Now you might know them as stocks or shares. Now this particular asset class gives you the advantages of really strong returns, but you could also lose everything. And also when a company does really well at the end of a year, then its profits can be distributed out to you as an investor with the dividends. Now we need to actually think about diversification. And I think about home buyers, because I think for most investors out there, they have a tendency to really focus on the companies which are closest to their heart. So that would be, for instance, in the UK, the likes of GlaxoSmithKline, Marks and Spencer's, HSBC, you name it. But there are some opportunities outside of your own home country that you should be researching and focusing on as well. Now I can think of two huge companies in the tech sector which are not Google or Amazon, but actually two companies which you might have heard of, called Tencent and Alibaba. Now these are two Chinese companies which are in the top 10 most valuable companies in the Forbes list. So again, this is an idea for you to think about how diversification might work for you. So just thinking about the next asset class, which I think should be on your list and also is the most prominent after equities, it's bonds. So what are bonds? Bonds are effectively an IOU. You lend money to a government, and the government use that money for roads, bridges, and for the staff and paying those staff. Now, the government knows that you do have alternative options for you lending them that money. So, as a sweetener, they will give you a twice yearly income, and that income is fixed. So hence, another word for bonds is fixed interest. Now, there are some pitfalls to investing in bonds, and one of them would be inflation. So a bond can pay you an income for a number of years, but inflation can also be increasing in that time. So your real income might be falling because it's fixed, yet inflation might be increasing. An advantage though of bonds is that it gives you a nice stable income. There are other issuers of bonds as well, and they can be issues from companies, and they're called corporate bonds or credit. But with a company issuing a bond, they obviously have much higher risks associated, and so therefore you should be expecting a higher income when you're investing in corporate bonds opposed to government bonds. So the next asset class probably that I would focus on when I'm thinking about the list of multi-asset class investing is the property sector. Now when I'm thinking about property, I'm not thinking about your mate Dave's let in Sheffield to students. No, I'm talking about commercial property. So that's warehousing, that's retail slots, that's hotels, Now, this is a asset class which, again, you would be investing with an investment manager. And that investment manager will be allocating those monies and identifying opportunities up and down the country. Now, with those opportunities, there would be a relationship with those companies who would be renting out those retail slots or those other types of commercial concerns. And all of those rental monies are your income. So what the investment manager will do is distribute all of that cash flow to you on a regular basis to you, and that is all distributed out to all the investors. One of the advantages of this type of asset class is the fact that commercial property would be included in most inflation baskets. So this is a particular asset class which actually does give you some inflation proofing. So that's really good for you investors who really want their real income to be increasing over time. But also one of the advantages is that it gives you some strong growth as well over time, especially when you are diversifying and thinking about other regions of the world which are fast growing. Now, the last asset class I think which we'll talk about is commodities. So commodities are again a asset class which provides you with some good strong returns over time, but you do need to be patient with it at times because a pitfall can be that it is quite volatile. Now, when I think of parts of the commodity sector which are volatile, you're thinking about oil. So oil, when you invest in it, you are exposing yourself to geopolitical risk. But what are the other elements of the commodity sector? Well, there is the precious metals, so gold or palladium, platinum. But there's also the industrial metals, so that could be cobalt, it could be nickel, it could be aluminium, lithium. And an advantage of the industrial metal side is the growth of electric batteries, of the meeting the issues of climate change. So you will be exposed as well to a growing area for a lot of governments where they want to build more wind farms, where they want to build more solar panels. And the materials that will be used principally are industrial metals in that growing sector. What do all the asset classes look like when they're blended together? So when they're blended together, they almost are like layers. Layers perhaps of a burger. So when you're thinking about this analogy of a burger and multi-asset class investing, it really does paint a picture of what you'll be getting. So I would say that in a burger, the meat and the buns are the most principal parts. You can't really think of a burger without those two layers. And I would say that the meat in the burger is similar to fixed interest or bonds and equities. So those are the main parts of a multi-asset class portfolio. And then the complements to that would be all the other layers that you might have in a burger. Now let's think about the blending and how that might meet all types of investors, because every single investor is different. So there are going to be some investors who are prepared to take on more risk, and there are some investors that are prepared to take on maybe very little. So a cautious investor would perhaps want pay maybe less of the meat and maybe more of the lettuce and the tomatoes, whereas a more adventurous investor might want maybe double the meat and maybe some bacon and some cheese, so actually something more racy. And then a balanced investor might have something in the middle of that or. So looking at it in this way, you can see how blending does work for a lot of people depending on how much risk they're prepared to take on. Now, how do you access this? Well, there are lots of funds out there that will manage this all for you. So you do get something that looks like a private client portfolio. And that's all wrapped in a fund. But you can identify loads of ETFs and funds, and you can construct it yourself really based on the layers that you want in, or based on the asset classes, and based on your amount of risk that you're prepared to take on. So one fund I can think of is the LNG Multi-Index Fund. So this is a fund where they have different series, different funds which go up the risk profile from cautious to adventurous. So this particular fund could give you perhaps an idea of the weightings that you should have in equities based on a balance, or the weightings that you should have on for an adventurous investor, etc. You get the point. So I hope that helps you. I would love to hear your thoughts on this particular area of investing where you invest in a multi-asset class style and what it means for you. But just to recap, as we come towards the end of our video today, what have we discussed? We've looked at all the individual component parts which make up a multi-asset class portfolio, their advantages, maybe some of their disadvantages. And we've looked at blending and the ways in which that could change depending on your risk profile. So I'll leave it there today. I hope you liked the video. Please subscribe, please comment, and I'll speak to you very soon.